Hi and welcome to my channel. My name is Danny Siem, and in this video we're going to be talking all about money market accounts. I'm going to tell you what they are, what makes them different from a savings account, and why you should get one. So with that being said, let's get started. A money market account is pretty similar to a savings account, except with a money market account, the banks are typically paying you a higher interest rate than you would get with a traditional savings account. I personally only use money market accounts because of the higher interest rate that they pay. I haven't had a savings account in years. And the cool thing is, at some banks, they'll even pay you more money or pay you a higher interest depending on how much money you have. So if you have thousands of dollars, you may get a higher interest rate at some of these banks. All right, so now that we have that part taken care of, let's go ahead and jump over to my virtual blackboard and I'll go over the similarities and differences between a money market account and a savings account. So let's start with the savings account. They typically do not offer higher interest rates than a money market account. They also typically do not provide checks or a debit card. However, they don't require a higher opening balance than most money market accounts. They have monthly withdrawal limits, and sometimes they have monthly fees. So when you are checking out a website and getting the details on a money market account or a savings account, make sure you see what their fees are and if they charge any. Whether a savings account is FDIC insured or not depends on the bank. Most banks in the US are FDIC insured, but some aren't. I know that in North Dakota, for example, they have a state bank that is monitored and regulated by the state, and thus they are not FDIC insured. But in 99% of the cases, a bank you work with is going to be FDIC insured, but make sure you check. FDIC insured essentially means the Federal Deposit and Insurance Corporation, which was created by the US government, guarantees you will get your money back in case the bank that you bank with ever goes out of business. The FDIC only insures amounts up to $250,000, but for most people, that's more than enough. When it comes to money market accounts, yes, they do offer higher interest rates than savings accounts. Most will provide checks and a debit card, but some don't. So make sure that you double check when you are looking for a money market account. Typically, money market accounts will require a higher opening balance than a savings account, but that's not necessarily the case. So again, double check. Money market accounts also limit the amount of withdrawals you can do on a monthly basis to 6, the same as a savings account. I want to pause here for a second and make something really clear. Money market accounts are not checking accounts. Yes, while some money market accounts will give you access to checkbooks and a debit card, they are not a replacement for checking accounts. Mainly because money market accounts limit the amount of withdrawals you're allowed to take per month, and that max is 6. So you can't withdraw something more than 6 times. Whereas a checking account, you're allowed to cash checks and withdraw money as much as you want without any penalty. So make sure you understand the difference. They also sometimes charge fees, but that's not always the case. It really depends on bank to bank. So again, make sure you double check. When it comes to being FDIC insured, 99% of the time, yes, they are, but again, it depends on the bank. So here's an example of a savings account from the Bank of America. Now, they require a $100 minimum opening deposit, and they also charge a monthly fee of $8 per month unless you maintain a daily balance of $500 or follow some of these other parameters here. Now, if we go down to their interest rates, it doesn't matter if it's above 2,500 or under 2,500. They're just giving you 0.01% in interest. I mean, that's pretty low. So let's go ahead and jump over to an example of a money market account and check out the difference. In this example of a money market account from Synchrony Bank, they're offering a much better rate as a money market account than Bank of America was as a savings account. Here, they're offering 0.9% in interest, which is fantastic. What they're also offering that Bank of America didn't is checks and access to an ATM card, which is fantastic. It allows you to get access to your money a lot easier. They're also FDIC insured, which is great. And as you can see here, the differences in interest doesn't change depending on the amount that you deposit. As I mentioned earlier, some banks will give you more in interest, but in this case, this bank does not. I also noticed that this bank has a $1 minimum to open the account, whereas Bank of America required $100. So it's a little different than what I mentioned earlier, and every bank is different as I discussed. So be sure that when you're going and looking at all these banks, determine what they're offering and see what is best applied to you. And in this case, if I was to open a new money market account, I would consider Synchrony here because I think the terms and what they're offering is pretty substantial. You might notice while doing your research that online banks typically offer better rates than large local banks like a Wells Fargo or a Bank of America. And that's because these online banks don't have massive overhead of managing and paying rent for all these locations all across the country. So you'll typically see better rates with online banks because of this reason. Well, that's all for today's video, so thanks again for watching. I hope you found the video useful. If you did, do me a favor and hit that like button and subscribe to the channel. I'll be coming out with more content in the next coming days, so I want to make sure you can stick around for that. In the meantime, if you want to check out some more videos, you can do so here or here. So until then, take care.